JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 9th of February 2021. So yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then guys, jumping into the charts, the first one I want to pick up here is the German index DAX, and today we're seeing a bit of a decline here. So the European markets are sliding a little bit, not much. But here specifically the German index is trading back or should I say was trading back below that psychological 14,000 zone. Currently it's sitting just slightly above it, but let's see if the bulls have enough steam to lift this one higher again. At the moment, well, I mean, it's not really looking good here. However, there's always a however, by the way. However, basically, even if we see a further drift lower here, don't forget that, well, I mean, in a way, this could still be seen as a temporary correction because, first of all, we're above this downside line and we're still above the 21-day EMA. So, for example, if the index drifts somewhere towards this this area right here, this 13,864 zone that I've mentioned this morning, then and let's say it struggles to move below it, then yes, we could see a nice rebound and a push higher. However, that gets broken and we see the further move here below this, then, well, I mean, this is where we could start looking at maybe some lower areas. Now jumping into Nasdaq 100, and yesterday, beautiful rally here again. Again, a new all-time high. The index managed to reach the area near the 13,698 zone. If we take a look at the cash index, we can see that the price right now is trading below yesterday's close, however not far from it. So in a way there is still a chance for this index to push higher. However, at this point in time, probably I'll take a very careful approach, given that we are kind of hitting all-time highs every day, almost every day. I would prefer actually to wait for a push for the 13,695 zone. So, and then yes, I will go for those higher levels. But of course, in that situation, I will still be very careful. And let's say if we do get a pop above the 13,698 zone, we see a further push higher, my probably stop loss would come somewhere at the same level here, just in case if this suddenly reverses sharply to the downside and starts kind of correcting much lower here. So again, just to protect myself this way, that's what I would do. But again, guys, you'll be the judge for you are the judges for yourselves, so you know your style of trading yourselves. But just an idea, guys, keep that in mind. Again, probably the one thing that we should share all in one thing in common is the fact we should always have our stop losses in place, so that it wouldn't kind of take all our accounts fully. Now, like I said, that's in terms of the upside. In terms of the downside, if the index starts dropping somewhere below the highest point of January here, near the 13,564 zone right here, then, well, maybe we could go for that larger correction finally, and yep, we could go for this upside support line. But again, let's not get ahead of ourselves. First, let's see how this is going to play out. For now, I'm kind of leaning a little bit more towards the upside, but as I said, I need that break above that 13,698 zone. Jumping into silver, and well, silver is pushing higher, and if you remember, I talked about silver and yesterday, and what I was saying that in a way, yes, we could go for some higher levels right now, but I'll be very careful near this 27.92 zone, which, if provides resistance, could force the commodity to drift back down. Now, this level is the high of the 6th of January, also the highest point of January as well. So, but if the price, or should say, if the bulls struggle to overcome that area, then yep, another slide here could be possible. So keep that in mind. Jumping into another commodity here, and that's Brent Oil. I haven't looked at this one for quite a while, but let me just remove all the drawings and have a fresh start. So overall, we can see that the commodity kind of is now trading slightly above the highest point of February. And let me just double check, is that correct? That's the highest point of February. That is correct. That's the highest point of February of 2020, and that level is roughly around the 59.98 zone. So we did have a nice, good, strong move yesterday. However, will this get maintained here? Or will this commodity continue to trade above this hurdle? Let's see, because right now we're seeing a bit of a corrective move lower. And well, I mean, if this starts dropping back below this 59.98 zone, then, well, I mean, maybe actually we could go for a bit of a larger correction to the downside. Overall, don't forget that we are still trading above this medium-term upside support line drawn from the low of the 22nd of April. So in a way, any move up until this upside line could be seen as a well, as a temporary correction. So again, keep that in mind. Of course, we do have a bit of a shorter term one here, a shorter term upside line, which is drawn from around the low of the 16th of November. This could be the first one to watch still, but let's put it this way: if this upside line gets broken, and if we see the price falling below the highest point of January, near the 57.40 territory right here, now that's where it could become very interesting for the sellers in the short run, and well, we could see this one sliding further south. So keep that in mind. For now, guys, like I said, long story short, yes, it is still positive, but I will keep an eye on this highest point of February of 2020. If the price continues to balance above it, yes, I will aim for some higher levels. But if it starts falling below it, well, then I'll be a little bit more careful. Now, jumping into Bitcoin. So if you remember this morning, Bitcoin, I talked about this one, and we were hitting these new all-time highs. Of course, thank you to Elon Musk yesterday. So yeah, I mean, looking good. However, now let me just jump into a weekly chart on this one, because I talked about this here idea where I said to you guys, keep an eye on the Fibonacci extension. Could be a useful tool, which could kind of show where the instrument could go in when it's in uncharted territories. And here, for example, I showed you two ways of drawing this one. So either taking it from the low here of the 31st of August, or actually taking it from this low, the lowest point of March of last year. And now you can see that, for example, this is where I said that in a way, it seems that, yes, we've reached that 50% retrace extension on the Fibonacci, and well, I mean, look at this beautiful move. I mean, we've tested that area, and then now we're seeing a bit of a corrective move lower. In a way, if we continue to trade below this area, below that 48,000 mark, then maybe actually it's time for a bit of a corrective move lower. However, again, don't get me wrong, I mean, it is looking quite strong here, this crypto, but if it suddenly starts falling below the highest point of January here, near the 41.90, oh yeah, so 40, sorry, not 41 point, but 41,970 zone right here, that's the highest point of January. If it starts falling below that, now that's where we could start looking at some lower areas, guys. So again, be very careful on this one. Like I said, this is just a quick update of what I was talking about this morning. So let's see where this is gonna go. We'll go on further. For now, like I said, I'm gonna take a bit of a careful approach, given that we have already kind of we have seen some strong moves here to the upside. Now Aud USD. So for this one, let me just jump back into a daily chart. And here you can see that the rate continues to travel higher. I need to remove this arrow. Didn't really kind of work out all the way as I wanted it to work out, but it kind of worked out only halfway. But yeah, so need to abandon that idea. Now what I'm keeping an eye on here is, of course, this downside line. And this downside line, and let me just adjust this a little bit. So it depends on how you're going to draw this one, because again, it could be a tentative one, but either we have already reached it, and yep, if we draw it this way, of course, if we're capturing the highs of 21st of January and the 27th of January, or if we draw it a little bit here, capturing the high of the 14th of January, then we will see that there is a bit of room here. But given that today we found resistance near this first one, the one that I drawn here first, and yep, I'm probably gonna stick to this one, because in a way it has more touches and it seems that it's getting respected a little bit more. So this way, basically, I will say that if we get a break of this downside line here, and then yes, maybe we could go for some higher levels. However, we do have a bunch of obstacles here on the way higher, like for example this one. Let me just zoom out here. For example, this one here, the 0.7764 level, the high of the 27th of January. Then we have the high of the 21st of January. So basically on and on. But what you could do here for now is just basically keep your eyes on the current highest point of today, and that level is around the 0.7736 mark. So if we fail to reach that this level again today, keep your eyes on it tomorrow. Yep, if we still remain somewhere close to this downside line, then there is a good chance we could see maybe a nice pop above this hurdle, above this barrier, and then maybe, yep, higher levels could be met. But again, that's in the situation if we get the break of this downside line. If the pair struggles to get above it, well, I mean, a slide lower could be possible once again. So I'll keep that in mind for now. And then my next target will be this 0.7648 territory, or this 0.7557 level right here. But again, all eyes right now are on this downside line. USD CHF. So very interesting pair, because first of all, we're breaking back below this downside line drawn from the high of the 28th of September. So in a way, it's kind of creating that little bearishness, I would say. But we're still above the other one, the short-term upside line here, drawn from the low of the 6th of January, which in a way could still kind of hold the rate from dropping lower. If so, then yep, higher levels could be met here. But even then, I would prefer to wait for a push above the 0.9046 level right here first, because this way, just to be a little bit more on the safe side, this move would confirm a forthcoming higher high, and more buyers could join in. But in terms of the downside, if we see the daily candle remaining below this upside line, remaining below the 0.8919 zone, somewhere around here, then yep, well, I mean, maybe we're done with the upside for now, and we could see a bit more downside here. So Eurogbb. Now, I haven't looked at this one for quite a while, but we are at a very interesting spot here. So after we broke this 0.8866 territory, we've drifted lower, so I've managed to reach my targets here, but now it needs to be readjusted a little bit. So first of all, I'll get rid of this level. I'm still going to keep an eye on some of the old ones here, but probably need to readjust this area too. However, no. I mean, that area here, the 0.8826 level, is quite an interesting one to watch because it acted as a good area of support, good resistance. So basically, if we get a break of this downside line here, let me just slightly adjust it. There we go. If we get a break of this downside line, and then if we get a push of the 0.8826 zone, now that's where maybe more buyers could join in. So be very careful on that one. Of course, I do understand that we're still trading below this downside line, so the trend is still to the downside. However, for me to get a little bit more excited with lower areas, well, now I would prefer to wait for a drop below the current lowest point of February near the 0.8738 zone, and then we'll take it from there, because a break below this will confirm a forthcoming lower low, and the next possible target could be the lowest point of April of 2020 near the 0.8671 zone. But for now, like I said, given that we already had some decent declines here, maybe we could see a break of this downside line. However, again, with the upside, as I said before, and mentioned before, guys, wait for the actual break. Don't try to kind of maybe get ahead of the ahead, or because otherwise you might get burned, because again, it could travel higher, or maybe it might not even travel higher. Maybe this has been enough for it, and now it's going to start reversing to the downside. So that's why I prefer to wait for a break of certain levels first. And finally, EURUSD. So this one is pushing higher nicely here. So yeah, this morning we were hanging above here, above this downside line, but we were still below the 21-day EMA. Today we already saw the push above the 21-day EMA, and now the big question here is, can we see a further move higher? Well, at the moment, probably it's a bit of a waiting game here, because as I mentioned to you this morning, I would prefer to see that daily candle at least staying above the 21-day EMA, and then maybe I'll go for those higher levels. At the moment, well, it's yes, there is a good indication that we could travel further north. However, I don't want a repetition of the same scenario as we had here, for example, on in the end of January, when the 21-day EMA did its job and kind of provided a good resistance. So again, like I said, I don't want a repetition of the same thing here, so that's why I would prefer to wait at least for the daily candle to stay kind of above this 21-day EMA, and because such a move could increase the pair's chances of drifting higher. So guys, that's it for this session. I hope you found it useful. This was just a quick review of some certain instruments that I looked at this morning, some new ones, and yeah guys, I hope you will have a fantastic evening. I hope you'll join me tomorrow morning at my Traders Espresso, 7 o'clock GMT time. But for now, have a wonderful evening, stay safe, and I'll see you later. Thank you very much, and bye-bye.